So I would request everyone to put their video on off and let us start with the session now. Hope everyone is able to see the screen and able to hear. So good evening, Strategic Alpha community members, Conviction Club members. I welcome you all for yet another weekly community connect session. So topic for today's discussion is melt up ahead in metal stocks. That is the topic for today. And we will be discussing other few things in this community connect. So before going forward, let me just give you this disclaimer that Strategic Alpha and Suyog Dhawan are not SEBI registered investment advisors. So the content provided is purely for from an educational purpose and should not be constructed as a financial or investment advice. So viewers are encouraged to conduct their own research or consult with a SEBI registered investment advisor for any kind of investment decisions. So this is all about the disclaimer. So let us go forward with agenda. What are the things which we are going to discuss today? First, I'll be taking you through the weekly roundup. Then I'll be taking you through why metal and mining stocks can do well globally and also in India too. Then I'll be discussing about valuations of metal index, metal stocks. Then I'll be taking you through Nifty last week update. What is that update which I gave last week? And what is the situation today? I'll be also discussing about that. Then, as of now, what we have seen is selective pockets are in bull run, like PSU Bank and other things. But there is no broader market bull run. So selective pockets are doing well. So when can this broader market outperformance can return in markets? So that we'll be discussing. Then I'll be discussing about update on PSU banks and capital markets theme. Then what's up with oil marketing companies and why oil marketing companies might be placed better than other oil and gas segment. So we'll be discussing about that. What's up with mid and small cap? What's up with Bitcoin and emerging markets? Can it be the best place for the next 5 years? That we are going to discuss in this today's session. And when can the money start flowing to emerging markets? So that is what we will be discussing. So let us go forward with the weekly roundup. This is 31st August 2025. And let us now first discuss about frontline indices. India VIX closed at 12.15, up 4.8%. Nifty 50 was down 0.6%. Nifty Mid Cap 100 was up 1%. Small Cap 250 index was up 0.6%. Public Sector Enterprise Index was up 1.56%. Then weekly performance on a sectorial indices perspective, Nifty PSU Bank Index was up 4.7%. Nifty Oil and Gas Index was up 3.2%. Nifty Metal Index was up 2.6%. Nifty Commodities was up 2%. Nifty Energy was up 1.8%. Now let us look at the commodities performance. I'll not talk about all the commodities, but important commodities. Uranium was up 7.4%. Then the other metals like lithium, iron ore, all those were up. Silver was also up 0.49%. So this was about the commodities performance. Now let us look at commodities performance industrial. So this were the industrial commodity performance. You can just look at it. I'll not be discussing more into detail because those are not important at this point of time. Now let us discuss about the news which matters the most. So Federal Reserve has cut interest rate by 0.25%, while the expectation was that the Federal Reserve might cut to 0.5%, but it has not happened. So the cut has just happened 0.25%, and because of that, we have seen some softness in the markets. So while now, but investors still anticipate that the additional cuts this year and the next year can happen. Then the second development was related to China, with China truce uh, tariffs to reduce by 10% access to rare earth and soybean market. So that is what the development is. In fact, just look at the developments which is happening related to soybean and the trade. So there is a softer stance from US, and there might be a case that in future India US trade deal might complete. So in US president signaled an imminent trade deal with India, and US sign a 10-year defense pact amid tariff turmoil. So in this today the market was weak, barring few sectors like Nifty PSU Bank and other sectors, few sectors. There was one sector which was showing early signs of outperformance was Nifty Defense Index. And the reason was might be this development from US. And as we are moving forward, the chances for US India trade deal is looking very firm because as we had discussed earlier that there is no need for India to buy Russian oil because there is no arbitrage, and even if we give up that Russian oil, it won't affect us much. That is what we discussed. And now what has happened is India has given up most of its crude oil buying from Russia, and which is giving a positive feeling for US, and there are high chances that India US trade deal might happen. So this is a early sign. A defense pact is an early sign of trade deal happening with US. So let us go forward. So the topic for today is once again, which let us come back to this today's topic of discussion, melt up ahead in metal stocks, and why I'm saying so. So even before this, few weeks back, we had said that Nifty Metal Index can do extremely well, and it has already entered into a bull run. And since then, Metal Index has done extremely well. We discussed about three sectors. One top was metal, then there was PSU Bank, and third was capital markets. So capital markets theme is consolidating as of now, but metal and PSU has extremely done well. And but now at this point of time, PSU Bank is still there, but the key discussion for today is melt up ahead in metal stocks. When I'm saying melt up, it means the euphoric rise on the upside, and why that is a possibility going forward. So let us discuss about that. So this is update from Elara Capital, and this is global metal stocks. And if you can see here, the this is May to 2005 lows. From May 2005 lows, Nifty global metal stocks became multi-bagger until May 2008. Once again, there was a global financial crisis and metal stocks fell globally. Then from 2008 to 2011, once again, metal stocks became multi-bagger. And from 2011 to 2016, once again, there was a meltdown or a fall in metal stocks, metal sector stocks. But once again, from Jan 2026 to Jan 2028, they turned multi-bagger. And in COVID, once again, they fell down, and the mega bull run started in COVID for metal stocks, which continued till April 2022. That is when US started increasing the interest rate and metal stocks fell down, but they were consolidating. And now at this point of time, at this stage, metal stocks are at that stage where there are signs of breakout, because now the price is trading even above May 2008 levels. So which means this this is for the, you can see here, this is first time got rejected, fell down. This is second time got rejected, fell down, and this is third time which is breaking out, which means, and there are no triple tops, understand that. I don't believe in triple tops, and usually when the two times touching resistance happens, and third time whenever it goes above that, it can create a big surge in metal stocks. So this is global metal stocks index. And you can read the comments here. The MSCI World Metal and Mining Producers Index, excluding gold and silver. So gold and silver is not included here. It is near its highest level since May 2008. So a zone that was retested in March 2022 when renewed investor interest and accelerated inflows both in physical commodity and commodity equity funds. The index appears poised for potential structural breakout. So as we have said earlier also in the commodity bull run, if you have not gone through that, just go through that. We are talking about commodity bull run and we are already in a commodity bull run. So when the commodity bull run happens, when the prices of output, metal output increases, what happens is most of the top line flows down to the bottom line and the profits of metal companies go to the roof. And that is what has happened with gold and silver. The gold and silver mining companies, they had reported hefty profits. But can it happen to other metal stocks also? But for that, first metal needs to go up, and later on maybe metal stocks also can also do well. And right now in the recent past, we have seen that copper surging to the next level. Aluminum now is at an inflection point. So some of the commodities have already started their bull run, and maybe metal stocks might also follow. Steel is one such thing which is lagging in the price, but most of the steel companies balance sheet, if you look, the numbers, if you look, the profitability, if you look, even for India and some of the global players also, the numbers are better than even FMCG players. And the valuations are extremely cheap. So the thing is, it is not extremely cheap in India, but some of the global metal stocks are cheap. India, the valuations are not cheap, but fair, and we are going to discuss about it. So this setup mirrors the price action seen in gold during 2004, while sustained fund flows and tightening awaited leadership shift within the global commodity complex. So this is what the early signs of metal bull run has globally. In India, the bull run has already started in metal stocks, which we discussed few weeks ago. Now, this is the most important thing to notice. So flows into commodity funds rebounded sharply. So this is uh, inflows into global commodities, materials, equity funds as a percentage of AUM, and this is long-term momentum. So this chart tells you about the AUM momentum into the commodity or materials equity funds, like commodity equity funds or sectorial commodity equity funds. So the AUM which got dipped after 2017 and it got bottomed out in 2019 after COVID. We have seen a surge in AUM. Lot of flows happened in the metal and mining stocks, and it topped out in August 2021. Once again, the flows to this commodity funds or commodity stocks fell down until recently. But in the recent times, we have seen that the flows have started reviving, and that happened in July 2025, and which is showing a revival. So what it means is not only metal index which is at a multi-year high, now the flows have also started coming into metal and mining or commodity stocks. Even copper miners, we have discussed about it earlier. The flows have started rebounding very sharply, and this was the important thing which you should notice. You can take a snapshot of it. Do take notes whenever we discuss that, because whatever you get in this weekly community connect, most of that is not available uh, everything at one place. So I bring a lot of insights from various sources for you to build that needed conviction about what the theme is. So this is what is looking for commodity things. Now this this is physical to equity rotation in commodities re-emerges after 5 years. Now see, this is the black line is inflows into physical commodity funds. So what is physical commodity funds? Like like copper ETF or gold ETF or silver ETF. Similarly, that will be called as physical commodity funds. So the fund flows until recently from April 2024 to October 2025, the flows in direct physical commodity ETFs or commodity funds surged like anything, but commodity stocks the money flow in the commodity stocks had just started recently. And usually what happens is, if you have seen here, sometimes commodity stocks, each and every time, if you see here, first the flows happens in the physical commodity, and the later the funds also enter into the commodity equity funds. So this is the cycle each and every time. First, the flows happens in physical commodity, then the money also flows to commodity equity funds. And same once again, the flows have happened now, and the flows to commodity equity funds have just started. Just started. Because if you see the past year, I think usually for how many means how long time the flows get stopped. So here the flows to commodity, physical commodity got stopped in 2016, July 2016, but the flows to commodity equity funds stopped only in April 17, which means there is a lag of 1.5 years, 1 to 1.5 years. Even here, April 2020 is when the top made, and here July 2021. Once again, it is around 12 to 14 months. So, which means that if, let us say, if it is topping here, we don't know whether it is going to top here or once again it will make a new high. But at least for now, it is for sure that next 12 months to 14 months can be very good for the flows into commodity equity funds. Everything clear? Comment as AC in the comment box if everything is clear. All clear? AC. Please comment as AC in the comment box. Yeah. So for next 12 months, the flows can happen into commodity equity funds. Now, why we follow FTVT approach of investing, and which is fundamentals, technicals, value, and trigger. That is what it gives us the conviction. So Nifty Metal Index has just given the lifetime high breakout in Indian markets. And we discussed about this sector rotation happening to Nifty Metal how many weeks back? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. 12 weeks back, we discussed that the big rotation, sectorial rotation can happen in Nifty Metal. And since then, Nifty Metal has done extremely well. And today, this weekend, it has given a lifetime high breakout, which means going forward, Nifty Metal Index can do very well. And for any stock or a sector to become a multi-bagger, it has to cross multiple lifetime highs. And for Nifty Metal Index, it is the first instance when it has just crossed lifetime highs. So it tells you where the metal index is headed. Now let us go forward. Now, see, even if the metal index is at a higher valuation, someone asked me during the last weekly community connect session, can we see a big multi-baggers happening in metal stock just like what happened in 2020? During that time, I said that big multi-baggers can only happen when the valuations are extremely cheap and the deep undervaluation is there. But right now, at this point of time, the valuations are not extremely cheap. Because if you see it here in COVID, the valuations were extremely cheap and the valuations were 2 standard deviation cheaper than the 10-year median average. But right now, the valuations, price to book, and why I'm looking at price to book at this point of time in Nifty Metal Index is because Nifty Metal Index is Nifty, all the metal stocks, metal companies, producers are asset heavy businesses. And when the business is asset heavy, you look at price to book or market cap to sales, not price to earning. Price to earning is least, it is not relevant in metal and commodity stocks. So that is the reason why I'm looking at price to book. So price to book valuations are fair. They're not expensive as such, but I'll say fair because in 2008, the price to book for metal index touched 6 times and today we are at 2.8 times, which means they are not expensive. In 2008, we were the Nifty Metal Index was too much expensive. So I'll not say that it is expensive. I'll say that Nifty Metal Index is valuations are fair, but they are not cheap. Selective stocks can turn multi-baggers, but index turning multi-baggers, I'm not so sure, because for anything to turn multi-bagger, the valuations need to be extremely cheap. Now, one of the company which I am tracking is relatively more undervalued than the metal index. And PSU integrated steel manufacturer, I think once again it is at an inflection point, because this week there were huge volumes, and I think it is at an inflection point. It is above 30-week moving average now. The valuation seems cheaper, because if you see here, this is 10-year market cap to sales ratio, and it is trading at 10 years, lower the closer to 10-year market cap to sales ratio. And prior to 2012 data is not available. If we see in 2008 market cap to sales for one of these PSU steel manufacturer, which I am saying integrated steel manufacturer, price to sales even touched 2 times and 3 times. So at this point of time, I think this is relatively undervalued compared to the metal index, and that is what is on my radar. So this was all about metal stocks, metal and mining stocks. Hope you have understood and why there is a possibility of a melt up ahead. And along with that, we have also discussed about tsunami of foreign funds which might come. As of now, it has not yet confirmed, because for the tsunami of foreign funds to confirm, Nifty should make a lifetime high breakout on in dollar terms. Nifty in dollar terms, whenever it makes a lifetime high, the foreign funds can once again start coming in India. But as of now, there is no such confirmation. If such thing happens, because money always flows to the place where there is a maximum safety. And at this point of time, from a price point of view, the metal stocks are at a stage where they can do extremely well compared to the market, and the valuations are not that expensive, and they are on a cheaper side. Some of the metal stocks are cheaper than the index itself. So can FII funds can flow into metal stocks? Because FIIs also look at the trends, and as I shared the data about which Elara Capital shared, I think it can help to get more funds, because for any stock to become multi-bagger, unit or any sector to become a multi-bagger, or for that matter super outperformance, I would say, not multi-bagger, it needs to be understood that what can propel that up move. Because a small cap can be propelled, means the journey can be propelled by HNIs, UHNIs, but a mid cap needs propellant as the funds coming from institutions, family offices, and large cap, it needs funds coming from institutions, family offices, retail, all put together. That is when only large cap can move big. So at this point of time, we need to understand that if you are able to understand this, you'll be able to gauge that. And if the fund flows have just started coming back in metal and mining stock, as I discussed earlier. Now, this was all about metal and mining stocks. Hope everything is clear about metal and mining, why there can be melt up ahead in metal and mining stocks. Please comment as AC in the comment box if you are clear about it. Now let us move forward and understand about market situation. So this is the last week's post which I did in the weekly community session, that Nifty has got rejected. This rejection, we have seen that Nifty not crossing that level, and there can be a pause in the overall thesis which I discussed about next 4 to 5 months about market. Selective pockets are already doing good, but for broader markets to outperform, we need Nifty also supporting, because no big bull runs can happen without Nifty support. So we need a support from Nifty But at that point of time, last week itself, I had said that there might be a pause from the flows. Maybe once again, we might consolidate and later on we might get a breakout. But I also messaged about it, means posted about it. Strong metals, not weak PSU banks, means both are strong. That is what I posted. And selective strength, capital market stocks. And the exactly it has played out that way. If you see, metals have remained strong even if the markets have been weak in past 1 week. Metals have done extremely good, and PSU bank has done extremely good, and selective stocks from capital market are doing good. So this is what I posted last week. But this week, what exactly has happened in the markets? Just look at this. So this week's formation, Nifty 50 rejection from handle plus a double shooting star. Two consecutive shooting star formation has happened. And especially on satellite channel today itself, I posted at around 3 p.m. Especially satellite is for more short termish, which we discussed. And I posted about it that I have reduced my leverage and booked profits, partial profits in PSU banks, metal, and all. Not because I'm negative on the markets, but because in leverage, you have to manage your risks well. So I booked partial profits in these stocks, and I'm bullish on the market, but this formation was not good. So especially if I'm holding not non-leverage, means cash stocks, I'm least worried about it. But when I'm on leverage, I cannot take risks. So I had cut down the exposure in metal, not booked profit, partial profits. So that once again, if let us say, because the thesis about next 90 to 100 days or 120 days still holds true as long as Nifty is above this 30-week moving average line, which means Nifty can consolidate and the selective bull run can happen in metal and mining and PSU stock. That is what is there. But we don't know. And I didn't want to take risks over the weekend, especially with the leverage trades. And I took that decision because in the weekends, anything can happen. And there was one development. Um, Indian agency, I don't know what government agency it is exactly, I don't remember right now, but they said that they have tightened the security or tightened the airstrip. What exactly? I don't remember that. So around Jamnagar refinery of Reliance and around that Arabian Sea level, they have said that this is no air zone, something like that. So, which is happening for the first time after a long, long time, which means we don't know whether if any global heightened geopolitical tensions might happen. And I didn't wanted to uh, I didn't wanted to take risk with my leverage trade, and that is the reason why. Because we might see that even if the Nifty gap down happens next week, no flying zone. Yes, so Nagarjuna had said no flying zone. They have declared it as no flying zone, and someone is also saying that Operation Trishul is going on. Okay, so I didn't wanted to take risk with that. So markets are bullish. We might see a knee-jerk reaction whenever if anything that kind of geopolitical tension happens. We might see a gap down, but recovering, the markets might recover very quickly. Now, one thing is for sure that what can happen in the next cycle whenever we see a gap down, let us say, because of some geopolitical tensions, what can happen with the broader market? And uh, this is broader market outperformance. This is Nifty 100 equal weight index divided by Nifty ratio chart, which means if the ratio is going up, which means broader markets might have just started the outperformance. So what it means is, uh, if let us say knee-jerk reaction happens on Monday or Tuesday next week, where big gap down or something like that happens, the next rally can be very broader. Right now, the selective sectors are doing well, but next week onwards, after the gap down and after the knee-jerk reaction, what can happen is broader market outperformance can return, and that is the seeds which will be sown for the bull run which I am saying about next 100 to 120 days. So as of now, there are very early signs, but selective pockets are already in bull run, PSU Bank and other things, as I discussed. So this was about this. Now PSU Bank, along with Nifty Metal, PSU Bank index is now trading at a lifetime high. So it is, this sector is already in the melt up phase along with metals. But I don't want to talk much about PSU banks because PSU Bank is a financials and I play it more like a satellite. Metal is my core circle of competence. That's why I can discuss more on that. I'm still owning PSU Bank partially, but yes, it is already in the bull run. Once again, let us say if strength continues after the gap down, because no breakout happens after the breakout, none of the sector immediately starts to run. So if there is a breakout, there might be a breakout retest too also, because there might be some weakness where I might get an opportunity to once again increase my exposure in PSU banks, at least on a satellite side. So that is what my strategy is. But overall, PSU banks are in a bull run already. One more thing is third sector which we discussed is Nifty Capital Market Index. It has not yet entered into high strength like PSU Bank or Metal, but the first signs it has already given, because there has been a breakout. This is called as a up flag breakout. Up flag breakout has already happened in Nifty Capital Market Index, and there was a breakout retest because yesterday there was a news from SEBI that they will be reducing total expense ratios, and which has impacted the stocks like HDFC AMC, Nippon AMC, some of the asset management companies, some of the broking firms also. And because of which, what has happened is there has been some softness in the Nifty Capital Market Index, but the structure has not broken yet. And I think the bull run can resume here. Not bull run, we would say that when it will make a new lifetime high, but it has started its outperformance already. So outperformance has started. Bull run it can enter into bull run at a next stage. Strongest is metal, second strongest is PSU bank, and third is capital market, which we discussed earlier. Now, one more thing which you need to look at is oil marketing companies. Not only today, we discussed about oil marketing companies 2 years back. And that is when I said that oil marketing crude is fundamentally bearish. And if the crude is fundamentally bearish, uh, you can expect a lot of windfall gains for oil marketing company. That is what I said 2 years back. And since then, most of all these three oil marketing companies have turned multi-bagger. It was 2.5 years back. So that is when they turn multi-bagger and they give selective outperformance compared to Nifty 500. This is Nifty oil marketing companies divided by Nifty 500, and they outperformed earlier, and once again they have started their outperformance, which means if someone is bullish on oil and gas, they should be looking at oil marketing companies and not the other laggards. And these oil marketing companies are leader from oil and gas space. So that is what you should look at. Now, one more thing which is about Nifty Mid and Small Cap Index. So Nifty Mid and Small Cap, we have seen that, just give me 1 minute. We have seen that the bull run has started in PSU banks or metal stocks, but it has not yet entered into mid and small. And I've been saying about it that mid and small caps are underperforming unless and until we see a breakout on Nifty Mid and Small Cap Index above of 20,772 on a weekly closing basis. The bull run cannot start in mid and small cap, because mid and small cap is not the best place to be. I discussed about it. Best place to be was PSU Bank and metals. So, but the consolidation is happening because you cannot time it to perfection. Uh, uh, and the consolidation is happening. Maybe we might see a breakout, and whenever that breakout happens, it will give us more confidence about mid and small cap index. But as of now, there is no breakout, and it should be kept on watch. This will be the key monitoring. Now, before that, I posted about it that gold and silver and many people benefited out of our weekly community connect, which I posted about it on Twitter. Happy to read all your comments which helped you to book profit in precious metals. It feels very good to me when this work helps everyone. So I've seen the comments and happy for all of you. But as of now, can there be a short-term trade in silver? And we are already discussed about it that precious metals are in a bull run at least till 2028 and 2029. And the video is available on YouTube channel. It is about commodity bull run. You can go through that. Why I say that precious metal bull run at least till 28, 29. And currently there has been a correction in both the metals. And in the last session also about the about hard assets, I've talked about it, but it is not the best asset class as of now from an investment perspective. It is what we did is for our clients, we have booked profit in the mutual funds what they were owning in gold and silver way before the fall itself. And we stopped their lump sum, they redeemed their lump sum and told them to do SIP for the next 3 to 4 years. Because in SIP, there is no worry. Even if the big fall happens, you are least worried about it. Because the precious metal bull run is at least till 28, 29. But lump sum, it is not the best place to do lump sum investment at this stage because equity as an asset class itself has turned favorable now compared to precious metals. 18 months back, it was precious metals which was heavily favorable. Today, the equity as an asset class has turned favorable. At least for the next 4 months, that is the view. Once again, we can update that later. So, but as of now, I was looking at a short-term trade, and can we get a short-term trade in silver? That is what I was looking for. The risk reward is favorable. 2% is the downside risk, and upside might be 5 to 6%. That is what I'm looking, and I'm looking for a short-term trade in silver. Now, we also discussed about Bitcoin. So Bitcoin is at a place when we discussed about it that it was heavily underperforming gold. But now what has happened is in last week, it has outperformed gold. This is Bitcoin versus gold ratio chart. When the ratio will close above this, it will confirm that it is going to super outperform gold. As of now, uh, I will not say that this is a clear sign of Bitcoin outperforming gold, but there are some hopes now. This candle which happened last week, it is giving me a hope that Bitcoin might start its outperformance compared to gold. So Bitcoin is at a place where I'll start accumulating slowly, slowly, slowly. And whenever the ratio crosses this 38 zone, I can increase my investments aggressively. That is what this overall chart formation and overall thesis also we have discussed about it. It is available on YouTube. You can go through that. But this is what Bitcoin is looking to me compared to gold. Now I posted about it. Silver is down 26% totally in just 9 days. Gold base is down 12% in 6 days. Uh, uh, hope weekly community is connect is helping you. And I've read all those comments. Thank you for the comments. There were this post got 2000 views. Hope it helped everyone. So one more sector which you can keep on radar, very, very early signs. But what happens is whenever I wrote this tweet saying that rising tide lifts all the boats, and rising tide means markets. And there has been a pause in the markets as far as the flows and all those things continue, at least for Nifty. But if the knee-jerk reaction happens and once again the small uptrend resumes for short term, This is a sector you can keep on radar, that is Nifty reality sector. And there is initial signs that it is forming a bottom. Nifty reality early signs of bottoming out and start of a new uptrend. Bullish on Indian markets for next 4 months at least. PSU bank, selective capital market stock, financial metals already doing good and can continue to do good. But this is a sector which you can keep on radar, especially if this sector is on your circle of, it's your circle of competence. You should not miss researching the stocks in this sector. One more thing which is important from, let us say, what I'm talking about is because we have seen that the valuation bubble stretching in US, but nobody knows that when exactly the bubble might burst. As of now, I think that I was keeping the view that maybe in December first week or last week I'll be reviewing about it. But if I review and I get a sign that no, the crash is not coming at least for next 6 months, I'll once again extend my view from 4 months to 10 months. As of now, I'm bullish for next 4 months. But because the problems are not Indian, the problem is from US market. So at some point of time, I don't know whether it will be 2 months, 3 months, 6 months, or 8 months, the bubble which is going on in US, which might get burst. And we'll come to know the signs when, as I've discussed in the last session, how we will be coming to knowing that the bubble burst in US or asset classes will be happening, and all those things we are tracking. But as of now, I don't know whether it is going to be 4 months, 5 months, and 6 months. So only when it happens, we'll come to know. But whenever it happens, after that or before that also, we might see a big fund flow happening to emerging markets, because always what happens is smart money always moves earlier before even big trouble happens. So let us say big trouble, smart money, the biggest of the biggest investors in US, which are very smart, they might have already started sensing it. Maybe if they think that the bubble burst might happen first, they might move out their funds from US to emerging markets, because emerging markets are cheaper than US markets. So and that is the sign which I'm getting it from. This is Nifty MSCI Emerging Markets ETF index ETF, and it is now trading at a inflection point as of now. Very early signs, not a breakout. Breakout has not yet happened, but if this breakout happens, let us say in next 1 or 2 months, uh, it will give us a confirmation that the big fund flow can be coming out of US to emerging markets. And emerging markets means China, India, uh, Brazil, or for that matter, Indian, Asian country, Asian economies, and similarly, the stock markets in Asian economies. So that will be emerging markets. And this consolidation is happening for very, very long years. Now, if you see, the total consolidation is for 6,000 days, which means it is a 20-year long consolidation. And 15 to 15, 18-year long consolidation. If this breakout happens, it is telling me that can emerging markets be in a bull run at least for next 2000 days. 2000 days is how much? 5 to 7 years, 6 years. So for 6 years, can it remain into a big bull run? Something similar to like 2003 to 2008? I don't know. But at a later stage we'll come to know about it. But these are my, because I'm in initial times of research and understanding. But can next 6 years, if this breakout happens, and later on once again in the weekly community session, we'll get some signs, we'll get some more clarity. But as of now, this is what is looking. So if that happens, emerging markets can be the trade of the decade completing this 2030 or 2031. And we have already discussed about it that US is a 25% of global GDP, but 75% of global market cap, which is unsustainable. But right now the craziness is going on. But how long the craziness can continue? Ultimately, rationality has to prevail. So when that happens, we might see the flow happening from developed countries to emerging economies. And this is one data which I'm tracking. As I said that US is 25% of global GDP, 75% of global world market cap, mean reversion is imminent. And this line is 30-month moving average. So multiple times it has tried to cross that, but it didn't sustain and fell down. It has tried to cross that and didn't sustain and fell down. What it means is, when if it has not sustained and fell down, which means American markets have outperformed the emerging markets. Emerging markets started to outperform, but the outperformance didn't sustain, and once again US markets outperformed. So on a continuous basis, US markets have outperformed over the long period of time, and mean reversion is imminent. Do go through my mean reversion session blog which I have written. It is available on our blog, which will tell you about mean reversion mental model. And if this sustains at this point of time, this is the thing which I'll be tracking. If this sustains at this point of time and makes a higher high, it will confirm that emerging markets will do better than US markets. So now let us move forward with food for thought and words of wisdom. So food for thought, Nvidia becomes first company on planet Earth to hit 5 trillion USD market cap. Just for perspective, Bitcoin, which is a global asset, has just a market cap of $2.5 trillion. Can Bitcoin surpass the market cap of Nvidia? This is a question which I asked to you. Do comment in the comment section. What do you think about it? And why do you think about it? And this is a food for thought for you. Now let us move forward. Learning Bytes. 80% of the time, after owning a potential multi-bagger, nothing happens. Returns most of the time comes in the 20% of the holding period. So even if you have held something for, let us say, 3 years, the returns will be coming in the last 20% period. And this is Pareto's principle. And this is what makes investing difficult, because it is like a Chinese bamboo tree. And I'm talking about multi-bagger investing, not compounding investing. Because there are compounders, consistent compounders, which keep on continuously rising. The earnings keep on rising, and the stocks also keep on rising. And these are the stocks which are owned by most of the institutions. But big money in a shorter period of time, let us say 3 to 5 years, you cannot make big money in consistent compounders. Yes, it can compound your wealth at maybe 20% plus CAGR, but big money, why Vijay Kedia, big players, Vijay Kedia, beat Rakesh Jhunjhunwala, all they made money from multi-baggers, not compounders. Some of the multi-baggers also later on turned into compounders. There are some category like Titan. Rakesh Jhunjhunwala never thought it will become a big compounder. He bought it thinking that it can become a multi-bagger. First, it became a multi-bagger. Then, looking at the story, he kept on averaging on the upside, and then it became a compounder, steady compounder. So, a multi-bagger can become a steady compounder. But a steady compounder cannot become a multi-bagger. A compounder, in very long run, it might look for you like it has become a multi-bagger, but the true definition of multi-bagger from my side is like, if a stock is going up 3, 5, or 10 times in 3 to 5 years, that is the true definition of a multi-bagger from my side. So 80% of the time, and most of the multi-baggers are like Chinese bamboo tree. You will see that the developments are happening in the company, but stock is not reacting. It doesn't mean that company is bad. So it is like when a bamboo tree is growing, first it grows downside, not on the upside. So it is in the consolidation phase of a multi-bagger phase. In 80% of the time, it is making that ground, it is making that base strong. And suddenly some And how value unlocking happens? In fact, I should have brought that, but go through my tweet on greater fool theory. Value is unlocked in the stocks, multi-bagger, potential multi-bagger stocks, only and only because of greater fool theory. You need a greater fool to sell your stock to him. Only then the stock can become a multi-bagger. And I'm not saying greater fool. It doesn't mean that you have to make someone fool. It is a greater fool theory. Just go through that. Also, you can search about greater fool theory on YouTube. It will be available. Some or the other person might have posted about it. So first, and I also posted about how does a stock becomes multi-bagger. In the next session, I'll come with that image. How does a stock becomes multi-bagger? Because first, no one is researching about that stock, but some smart money enters. Then later on, some follower enters. Then later on, some niche research entities publish the reports. Then later, institution enters. Then later retail enters. Retail always enters at a top when the journey already has happened in past. So that is how the greater fool theory becomes, and that is how it becomes a Chinese bamboo tree. So returns comes most of the returns come in the last 20% phase of that holding period. So this is what makes investing in potential multi-baggers difficult. So most people lose conviction during the null period. Only a few people make money after holding a potential multi-bagger and make most of it. And what is the solution for that? Because to make potential multi-bagger returns from any stock, it is extremely important that you buy a stock extremely cheap valuation. And when you have bought something at cheap valuation, which means the stock will be ignored by institutions. And when the stock is ignored by the institutions, it might take long periods of time for the value unlocking to happen. So what is the solution for that? And the solution is FTVT, which we follow. Never ever put all the money at one go. Whenever you find a deep value, you buy something as a ticket, as a ticket. And when you think like this is what we do at FTVT, we average up on the upside. Never ever average on the downside. The stock, no matter how great the potential stock is, never ever average on the downside. So because when you find a deep value potential multi-bagger opportunity, you say that I am smarter than the market and let me put some money on my thesis. But the value unlocking will only happen when market will recognize its true potential, and that is when market will reward the stock and it will start going up. When the stock starts going up, then you will say that market is smarter than me. That is the reason why market has recognized this, and let me add more. So at first you say that I am smarter than the market. At a later stage, when the stock starts going up, you say market is smarter than me and let me put more money. That way, what you do is you average up on the upside, and when you average up on the upside and when you don't average on the downside, you're automatically taking care of your losers, because when you take care of your winners, you don't have to worry about the losers. Even if the stock goes down 20, 30, 40%, you don't have to worry, because anyway, you're not put all the money at once. So that is the approach which we follow in FTVT. And there is a workshop which I'll be taking where I'll be explaining about FTVT process and how it can help you in such kind of investing. So don't invest all in one go. Start small when there is a deep value zone. Average up on the upside in the chunks as the thesis plays out, and maybe at a later stage, earnings also start improving. Whenever you own a potential multi-bagger, there won't be earnings. Earnings will be bad. The numbers will be bad. Bad numbers is the reason why the stock is available cheap. So when the stock starts moving up, maybe later the earnings also start going up, because stock will always move up before the earning comes. Most of the times you must have seen that भाई result तो अभी अच्छा है, but stock already multi-bagger हुआ है. Have you seen that happening? And why does that happen? Because smart money always chases the stock before even results come, because result is outcome. You don't make money on the basis of what has already happened. You need to anticipate the earnings, and how to anticipate that earning in the FTVT analysis. Once again, I'll be explaining about that. And that way, if you are in a stock before even earning breakout happens, that is when you can make maximum amount of potential multi-bagger gains. And that is how you can have that low risk, high uncertainty, heads I win big, tails I don't lose much kind of a situation. So this was all about the learning Byte. Hope it helped you. Now let me take you through the word of wisdom. So I'm not only just a investing mentor, but along with that, I'm also a trading mentor, because I've been myself first into investing journey for long period of time, for many long periods of time, because I've been into markets for the past 16 years now. 16, not 16, even it's been 18 years now. And in this 18 years, for me to be successful in investing, it took at least 10 years. But for me to be super successful in trading, it took me more than 13 to 14 years. And for the past 4 years, I've been a better trader. I'll not say an expert trader, but yes, better trader. Now today, my investing and trading skills go hand in hand, because it helps me, a trading skill helps me be a better investor, and investing helps me to be a better trader. And so in trading, if you are a trader, because trading is to create capital and investing is to build wealth, and you must not confuse among these both. It is very clear, trading is to create capital and investing is to build wealth. And be your thought process should be clear what you're doing. Whether are you a trader or an investor? Most of the people are not clear whether they are a trader or an investor. So in trading, wishful thinking always makes you lose money. And what is wishful thinking? भाई मुझे लगता है कि मार्केट ऊपर जाएगा. मार्केट डजंट केयर क्या आपको लगता है या क्या मुझे लगता है कि ये होगा या वो होगा. देयर इज नो रिस्पेक्ट टू द वर्ड्स फ्रॉम मार्केट साइड. मार्केट डजंट केयर. It will do what it has to do. So as a trader, always try to understand the language of the markets the way we are explaining it to you. And if you are able to understand that, your wishful thinking will be away. How many of you have lost money because of wishful thinking? Please comment in the comment box. There is no harm in admitting. If you admit that at an early stage, I would be able to help you. Just because of wishful thinking, how many of you have lost the money? At least I can see 15, 20, 25 comments. So wishful thinking doesn't work in market. That is the word of wisdom for you. So one more thing which I wanted to share with you is we are hiring fundamental research analysts for bottoms up research. Also top down sector specific research analyst. The location will be Lower Parel, Mumbai. Role will be full time. So if you have zeal for learning and wish to associate with us for long term, I'm a long term thinking person, and I don't want anyone. If you are thinking that by 2-3 साल कर लेते हैं और please don't come. If you wish to associate with us long term, do send your resume or CV at suyog.dhawan@strategicalpha.in. Do mention in your in the email what is your USP, what is your unique selling proposition, and why should we shortlist you. So if you have zeal for learning, this is the opportunity for you. We are hiring. So this was all about this week's weekly community connect. Thank you everyone for joining in. Don't forget to follow us on our social media handles for the dose of knowledge, wisdom, and ideas. We are available on Facebook, YouTube, Instagram, and Twitter. My Twitter handle is suyog_dhawan. And one more thing which I'd like to share is about techno value investing workshop. I'll be soon starting techno value investing workshop. It is about FTVT. FTVT is nothing but blending of fundamentals, technicals, value, and trigger. Fundamentals tells you what to buy, what not to buy. Technicals will tell you when to buy, when to increase, when to reduce, when to exit. value will tell you how much to buy, and triggers will help you prioritize between the bets. And this becomes a holistic analysis, because you will never be in a situation that you are confused. With FTVT analysis, you'll be high conviction investor. So this was all about today's session. Also, if you have liked this session, don't forget to like, share, and subscribe